All right. So for this session, this is relevant whether you watch this live, obviously, or in the future. When we're starting to make multiple month highs, or in this case, all time highs, like here in July 2021, it gets boring and drifty and grindy. We still move, but they move slow. So equity markets generally have a buy and hold mentality. And so you're not going to get the markets to go up fast when they're going up in a trend and making new highs, multiple month highs, or like I said, all time highs. The only time markets go up fast is after they went down fast. When you can get subsequent rallies that come firing out of the hole because we're weak and things like that. Volatility, then you'll get sharp moves to the upside. But volatility generally comes where fear gets injected in the market, and whatever drives us to we're not strong anymore and we're weak for a while. And lately it's been one or two sessions and we come right back. But the point is, when you're in this session where you're just moving up, and lately this has been going on, and usually I don't start the recording for these sessions until I get into the content of the session, and I cover what's going on in real time, and in real time it's still relevant for anybody watching this in the future. So when you start grinding up an index futures or an indexes, you generally just boring drift, and you have to account for that. All right, that's number one. Secondly, what I wanted to talk about today was the funnel and simple review. What's the funnel mean? Let's just go to a chalkboard here. The funnel, I think I did something similar to this, but just stay with me. A funnel is what I would construe as everybody enters a step one in trying to create an opinion in the top of the funnel. That's what the top of the funnel is. Everybody's step one. What gets you bullish or bearish neutral? And I think that it'd be fair to say that there are a lot of different ways, reasons, things to get you bullish or bearish, right? There's a lot that would go into the top of the funnel. And the bottom of the funnel, what we're trying to come out with is a trade. I mean, that's the whole filter. So the funnel, at the top of the funnel, you're getting a lot of people that come in with their methods and their studies, their work to get them bullish or bearish to create probabilities. As you get into the neck kind of the funnel and you start to distill down what really matters, a lot of the stuff is irrelevant up here. There's a lot of reasons to get bullish or bearish, but a lot of it's not really creating a probability. And then you move into what I would say step two is the neck of the funnel. And I think that there's less step twos out there. There's a lot of step ones, but there's less step twos. And the step twos mostly are where people are looking to get long or short, support or resistance. There's a lot of different reasons people come up with support or resistance, but the premise of having a level, a zone, an area is pretty common. And I'd fit that into most people's step two. That's what gets you to sit up in your chair, the aim and ready, aim, fire. Step two is aim and ready, aim, fire. Now, step three would be the bottom of the funnel and actually get you into a trade, and then eventually step four out of a trade. But into a trade, you would think that there's only a couple reasons that would have you pull the trigger. And that's not the case. However, it is in this community, or it's becoming that in this community, or it should be. But it's not the case out there in the retail trading community of most people who try this can't do it. And they're using all kinds of different ways to trigger. Some are good, some are bad, some are irrelevant, but there's more. There shouldn't be a lot of different reasons people are getting into a trade in this group. With the work that's been done and the tools that have been created, you really can narrow this down. And this is your step three, by the way. You really can narrow this down to, if you're bullish, that's step one. All right. You're into support, that could be step two. And you see shorts come in or longs go away. And remember, if you're bullish and you're in support, you're looking to get long, right? You see longs go away. You see shorts come in. You see a big sell order come in, right? A sell order come in, and market can't go down. You really should narrow down what you're looking for with respect to other people's positions to help with the reasons you'd have your fire and ready aim fire to actually get you long or get you short. And I think that before maybe this group or maybe before we've narrowed it down to make it easier to read order flow, there were too many reasons why people would fire or have a reason to fire, and they were inconsistent or they were all over the place or they didn't even identify the breakdown of ready aim fire. You got to continue to work on what your process and progression is, because that's what a trade is. That's what's going to get you and keep you successful. So you have to be deliberate. You have to be specific on what you're thinking, or else it goes back to a bucket of Legos spilt out all over the floor. You could have all the right pieces, but you spill them on the floor, it's overwhelming. What's it going to look like? Separate the colors. You got to organize your thoughts and put them under these step 1, 2, 3 umbrellas so that then you could say, hey, I have a good probability of where the hell the market's going to go. I have good levels. I have a good execution probability. When I tie them all together, I trade well. When I think through my location, I actually could have a crappy step 1 and be okay. But I work on my step 1 and my step 3 becomes better. Why? Because I'm not looking to do step 3 until I have my, step, because my step 1s are better. If I don't have a good step 1, then you're wasting a good step 3. So you want to have, don't get into what's more important. The mind kind of wanders with that. They're all important. Everything you do when you're risking money is important. How you feel, how much you slept, every little thing and big thing. So, of course, what you use to create an opinion, what you use to confirm and justify that opinion, what you use to pull the trigger, what you use to get out. But again, I look at it like a funnel, and I think there's too many reasons, but I can understand why there'd be a lot of reasons to get you bullish or bearish. You narrow those down into step 2, and there's too many in the funnel of the funnel that are because most people don't know what to look for. But in this community, that's not the case. It could really be narrowed down using less longs, more shorts to get long. Big seller comes in, can't go down. Cross over an iceberg, right? You're bullish. You see an iceberg come in, they go through it and cross back over in your area of support, and you're already bullish. I mean, these are now ways you build an idea and then execute the idea. All right. So the next thing is it segues right into review, but simple review, like I put on the previous page. There are many people in here that are willing to put in the time. The tragedy to it is when you're putting in the time that you're willing to put in and you're wasting it. That's like, you go to the gym for 2 hours, but you really don't do anything that's going to help you lose weight. You're willing to put in the time and the effort, but you're really not efficient in your workout. You don't even need to put in that much time. So you're willing to do something, but you're not getting the results because most people, when they look back at what they do, inefficiently look at what they do. They just glaze generally over what the market did or look at charts and try to predict a pattern. When I see this happens. So it makes sense that a screen share or a recording would be most helpful, right? And a screen share of what you were doing when you were doing it to what was going on. And now you could really duplicate or replicate is a better word, the real time better. But if you had a screen that just had and was your review screen, you begin to really narrow down the most efficient way to review, and you'll actually look forward to it more. I mean, for someone who tells me they review at the end of the week, to me, it's like do you really remember what you did Monday and Tuesday and Wednesday? Thought why? It's impossible. You forget. What are you reviewing? What you forgot to do 4 days ago? You got to bang this out, and you got to make it simple and efficient. So just like recording this, I was bullish when the market bounced back from CPI. But then if you guys just look at this recording, when this big long came in, now he had already come in before I started recording, and that's this big 68 quarter right here. So it sticks out here. But then I look up here and say, wow, that must be pretty big because it washed out everything around it. It's the only thing that sticks out. So then I look down and it's 213 contracts. So then we scaled up, and at 81 even at the same time, a 213 lot offer went in. So we track that not only it's a long, but we're tracking where he's trying to get out. And that was at 81 even. Usually when they come in right on or before or after within a minute of the open, they call direction, and they did. Can I just buy it? No, generally not. It's not going to be that easy. So you take that in combination with a step one that a weak CPI number came out, we couldn't break. And now you could just fast forward it and see, where would have been a place to get long. All right. Not only back upon him used as support, but different moments when shorts come in. All right. I took a shot and a loser right there when I seen shorts come in right here. And then, but willing to get back in when I seen shorts come in where he was long from, and then seen more shorts come in. And then when the shorts puked, well, let me back it up. He had some shorts puking here, right? And they were some of the biggest ones of the session up here. You get out of something, or you could sit back and get out of everything. Look to get back in. You remember, you're playing it from the long side, right? You're playing it from the long side. What happened here? Oh, remember the big seller came in? So a couple times a big seller came in right there. Wait, right. Oh, shoot. Right there. Right here. We went back to 73, came in again. Bam. Well, I had a pretty good idea that the market's absorbing these big sell orders and really can't go down. That's another good step one, or even maybe a step two, confirming the upsides of the right side. But when you see, what am I looking for to get long? I'm looking for shorts to come in and longs not to, just like in here. What's going to get you long? You're already bullish. You already got confirmation. And what's going to get you out if you're long? Look at that. Big long comes in, decent short puke, two big buyers. I think it ended up being three big buyers because I made that call and I said, be careful being long because of all these big buyers that were coming in, and it dips down. But when it dipped down, what happened? Let me see it. Let me show it to you again. When it dipped down, some shorts came in, and that long goes away, gives them an excuse to release. Long comes back in. Once they get below him, it's a little bearish, and it was. And I'm talking about these 74 quarters. All right. Now, you get above the 73, they could walk it up. And they did. And it was a grind, but it was readable, right? Long comes in right there. You actually see my arrow on the recording come in to point to where that guy was. Let me back it up. There it is. My arrow will come in on the recording. Let me play it to show people this long came in right there. And careful about walking down. And we do. Where do we walk down to? Where the shorts are stuck. Round and round we go. And then the nice breakout moment was when we got these shorts to come in right in here, walked up, and I don't think it looked back from there. Another big short came in at 78 and keeps walking up. Long comes in right there. If that doesn't get you to scratch your head right there, nothing will. I think this was the highlight of the session. This long comes in, this short goes away. If you understand what that means, then downside's the right side. It happens with probability and it's not random. So you're seeing this happen over and over again. That's the definition of probability. And you know why it's happening. That's the definition of less randomness. If you don't know the golden rules, long equal sellers, shorts equal buyers, what does it take for price to go up? More buyers, less sellers. What does it take for price to go down? More sellers, less buyers. Those are the four golden rules. If you don't know those like the back of your hand, everything else makes less sense. Everything else won't make sense. Everything else will be harder to understand. You know more than 99% of the people by knowing those four golden rules. And now you're seeing it in this and with this tool. So this is the recording that I had from today, and you can make a nice file. You could organize it into iceberg situations and long shorts. And what you'd find is that you just create, you don't need that many files or that many examples because it's just repetition. It should be kind of the same old review. The step one might have a variation to it. What makes you bullish or bearish, right? Your step one. But a lot of boring stuff that should be similar. I say boring because it should be repeated for what gets you to aim and fire. Hopefully this helps. And I don't want to spend a lot of time in these coaching sessions because I think they're just quick hits. We don't need to spend an hour together. We really don't. We just get you off and running to what's important, what could help. Better review than most. If you're not doing review, that's shame on you. I mean, I can't, it's just, I don't know what to tell you. If you are doing review, you probably could tighten it up a little bit, make it more efficient. And then if you are, if you got Ninja or Sierra and you don't have the verbal journal, it makes it real easy just to document some of your notes. And now you could review what you were thinking because you're not going to remember what you were thinking on Monday when you review on Friday. And you're not reviewing enough if you just review once a week. But you don't have to painstakingly plot every trade on a chart that you print out. I mean, I could see people not wanting to do that. But take a little bit of pride in what you did, what you thought, and what you're seeing, and get better at recognizing it in real time. Yes, I did, Mike. Get better at what you're recognizing in real time and get confident that you're able to see it in real time. So then you get confident in reacting and executing it in real time. That's everybody's weakness, right? Real time. So that's all I have for you this week. Stay safe, and we'll see you guys in Discord.